Mayuresh Joshi joins us. Mayuresh, let's start with Lupin. They've taken a price hike, an important price hike. Do you think Lupin is a buy now?
Morning, Nikunj. Clearly, I think if you look at the positives and the negatives, first, if you look at the positives that Lupin possibly has, 215 ANDA applications, that includes 35 FTFs, 117 approvals have come in so far. So there is a huge scope in terms of the approvals to come through for Lupin. Secondly, I think if you look at the two potential markets that Lupin is addressing, the OTC market is something that the management is very keenly focused upon, and the branded products market, which just forms 10-12% of Lupin's overall pie, they're expecting that to increase multifold as well. Now, what has gone wrong with Lupin is no applications procedurally came through US market, specific to formulations market, dipped close to 26% in the quarter gone by, and it was the European and the Indian markets that possibly bailed it out. The Japanese markets produces huge amount of generic opportunity with $14 to $16 billion of drugs going off patent, and they obviously have a first mover advantage there as well. However, I think the approval pipeline is something that we need to keenly watch out for. The Gavis acquisition that they did at 9.2 times market cap to sales, again, the integration and the synergies related to that, and the impact on the consolidated P&L numbers is something to be watched out for. And thirdly, I think the valuations at 26 times, our belief is that Lupin is very fairly close to its fair value, at least as far as FY16 numbers are concerned. So again, I think Lupin remains largely neutral. It's very close to our fair value. But again, within the pharma space, Nikunj, we stick with Sun or Aurobindo. I think we've just crossed our target price even on Dishman Pharma, which has given a huge move yesterday.
So, in general, you are of the view that the fundamental comfort or the valuation comfort in headline pharma is not there.
Generally, yes, Nikunj. I think if you look at the trailing averages and if you look at the kind of earnings expectations that one really has, I think a lot has been probably built in terms of how the price movement of a lot of these stocks have taken place. So if I remain very, very selective, I think one really needs to understand how the pipeline for a lot of these companies might pan out. And yes, I think generally for the pharma industry, one really talks about a huge lot of drugs going off patent. You've seen huge addressable market size. But again, I think it takes time. And again, I think the kind of valuations that these companies are currently trading at, I think you're not getting a valuation comfort for most of these companies. So again, I think if you're holding on to these stocks, I think hold on at lower levels because you're holding on to qualitative companies. But from a bottom-up approach, I think very few stocks that you can possibly pick from a long-term perspective, at least from this point of time.
Mayuresh, news out yesterday that cigarettes and pan masala are going to cost more in Uttar Pradesh as the government has now hiked their VAT rate as well. Do you think yet again this clampdown is going to disturb the volume picture for ITC, wherein we've already seen what the government clampdown, or rather the health ministry clampdown on cigarette pricing has actually done to volumes for ITC?
Morning, Aisha. Clearly, yes, I think this impact will have a huge amount of dent as far as the volumes are concerned for a lot of these cigarette majors, ITC included. So clearly, I think the volume degrowth that you saw in the past few quarters, I think with price increases happening through across states, and this might just keep on happening across different states across the country. So I think the volume degrowth might be quite evident on a stock like ITC as far as the cigarette volumes are concerned. However, I think the price increases more or less offsets the kind of loss that they're making in terms of how the volume degrowth has taken place. So the demand inelasticity obviously stays in the cigarette business. But again, I think ITC has been very, very conscious. The management has been very clear to grow its other businesses. But clearly, I think it's going to take time because cigarette still forms a major component as far as bottom line is concerned. However, I think valuations are extremely attractive if you look at ITC from an overall FMCG pack. So one really needs to understand how the impact on the P&L might happen. I think as far as core numbers or absolute numbers are concerned, we do not foresee numbers falling per se because of the price increase that might actually offset the degrowth in volumes.
Okay, let's slip into a quick break with news that the SGX Nifty is indicating a flattish start but with a negative bias. Expiry day as well, so expect a lot of volatility, lots of stocks though which are going to hold out. We'll discuss all of those with Mayuresh Joshi and our technical experts when we come back. Back with the market still counting down to what the pre-open rates are going to look like, and the Singapore Nifty is much in line with the rest of the global cues, indicating a bit of a quiet to soft start. That, of course, is our markets, how we shut shop yesterday, a gap down start, then a massive bout of recovery coming in from the lows. 78.45 is where we managed to shut shop yesterday. But given its expiry day, expect some amount of volatility as well. It's a truncated week. It's a long weekend coming up. So do expect some amount of chop and churn to actually take place. But what could be the individual stocks wherein you could execute trade and make money? Ashwini Gujral and Nitesh Thakkar are still with us. Ashwini, your 8:45 ideas?
Well, Unichem Lab, that's a buy with a stop of 285, target of 302. And also going into the policy, realty stocks are beginning to move up. So Oberoi Realty is a buy with a stop of 245, target of 262.
Videsh, we've discussed two. Let's move to your third idea, which is BEL.
No, BEL is something which we have discussed. The third idea is HPCL. We saw some kind of strong buy signals on the hourly charts towards closing yesterday. I think that's suggesting a retest of recent swing highs of 810, possibly 825. So this is a buy with a stop at 776. And my next idea is a sell on Adani Ports, which has been corrective, has been underperforming for last few days. Could be sold with a stop at 317 for targets of around 300.
Okay, let's also understand what sort of cues can we expect from the currency market as well, considering the rupee clocked in its third day of declines yesterday. Manisha's here with all the cues. Manisha?
Morning, and thank you for that, Aisha. Yes, after 3 days of decline, the markets are expecting the rupee to open on a steady note today. Having said that, there's not very clear cues coming in from the emerging market. They are trading mixed to slightly negative. If you look at a Malaysian ringgit, that's 1% down as we talk. So there is mixed cues when you talk about the international markets. The US dollar is off its 3-week highs, and that could be supportive. But having said that, the markets are now really preparing for the RBI meeting on Tuesday, and there's an expectation of a rate cut from that, and that really could support the currency. Apart from that, RBI also is expected to detail the government borrowing for second half of FY16. 69% of borrowing already has been done, but markets would watch out for exact number there. The Yellen testimony today in the evening is yet another factor to watch for the further direction here. In the global markets, ECB yet again has said that they are not in a hurry to increase monetary stimulus. You have seen commodity prices decline, the China slowdown, financial market uncertainty. Most of the central banks really seem to be putting on that wait and watch mode. We have seen Japan do that. The US Fed also did not move, and ECB is the latest one to join that rank. In the other markets, the global bonds seem to be losing steam, while we have seen volatility stabilize, but the uncertainty has continued to linger on. In the Indian markets, the call rates have been volatile ahead of the September quarter ending. The range has widened between 7.2 to 7.9 as of now.
So the key monitorables, if you're planning to trade or if you're planning to invest in the currency market, volatility, I guess, is here to stay. Okay, now, Cadila Healthcare has been a marked outperformer. Yesterday it appreciated by 76 rupees, and we'll be talking to the management in less than half an hour. Now, of course, Pankaj Patel, the chairman of the Cadila Group, someone who's rarely seen on television, will be doing the honors of ringing the bell at Bombay Stock Exchange, which has moved to Ahmedabad. So that's an interaction you certainly don't want to miss, because the stock has been trending. The man is rarely seen on TV. They've come out with excellent set of numbers, and Cadila is only large pharma company which has its own molecule in the anti-diabetes space. So I'm sure Neeraj would be getting some update on what is the progress of that molecule as well. Mayuresh, do you track Cadila, and what explains the recent outperformance in Cadila?
Yes, Neeraj, I think we do, Nikun, we do have that under our coverage. And clearly, I think it's the same story as far as the other pharma companies are concerned. The numbers are much better for Cadila over the past few quarters. The India application pipeline, again, is extremely strong, like the other pharma companies and its peer group comparisons. However, I think the only deterrent that we probably have is valuations at this point of time. So I think our take is the same. I think fresh buying probably not at these levels, but investors holding on to the stock should hold on to a stock like Cadila, because it's a qualitative franchise.
Okay, let's discuss ITC and what this UP government hike of the VAT on cigarettes as well as pan masala could actually do to the prospects of ITC. Naveen Kulkarni, he is the co-head of research at Phillip Capital. He joins us on the phone line. Naveen, hi, good morning. And time and again, we've seen this clampdown on ITC, wherein one of the state governments always comes in, increases and slaps additional taxes on cigarettes as well as pan masala. Do you think it's bound to impact the volumes for ITC as has been the case in the past?
Yeah, in case of the VAT rate hike by UP government, UP is not the largest contributor to volumes for ITC. So UP contributes to around 4 to 5% of the volumes. So compared to states like Tamil Nadu, Kerala, which have significantly higher contribution. So the hike in VAT rate by UP may not significantly impact the profitability in the near to medium term, but what happens because of hike is it's directionally negative for the company because UP had actually cut down VAT rate from its highs about a couple of years back. Now they are again hiking it, so it means that again more other states could also follow the suit.
I mean, for the longest time, many experts have argued that cigarette consumption or tobacco consumption is completely inelastic. It will move irrespective of the underlying price trend. But is that conventional wisdom getting challenged now? Because first, cigarette industry has been hit because of a series of excise duty hikes and now VAT on top of that.
No, it's not that inelastic, right? So if we look at globally, what happens is that the cigarette consumption has been coming down. So has been the case in India also. So if you look at the last 5 years volumes for cigarettes, they are, I would say, down. In the last 1 year volume, or rather last 6 to 9 months volumes have been down by almost 14-15% for ITC. So that means definitely they are not very inelastic. So there is some bit of elasticity which is there for cigarettes, but it is not very high, but it is after a certain price point when cigarettes hit price points of around rupees 10 per stick, then the consumption starts coming down significantly.
So would you rework your rating on the stock or your target price?
We have a negative recommendation on the stock with a target price of 270. So not much changes for us.
Okay, Naveen, good chatting with you. 316 is where the stock is, and Naveen continues to maintain his negative view on ITC, and the target price is well much lower than where the stock is currently. But let's also bring on board Poonam to talk about what brokerages are now saying about Strides Arcolab. Poonam, what is Jeffrey saying about Strides?
Well, Asha, in fact, they have initiated coverage on Strides Arcolab with a buy and a target price of 1,500. They do expect margin expansion coming in for Strides. Margin expansion of nearly 320 bips rather is being expected over the next 3 years, led by backward integration as well as the product mix. Both these factors are going to aid the margin expansion. Not just that, they also state that US and Africa would be the key revenue drivers for the company, and also the management track record is pretty much good, and that from there they are driving comfort in terms of the unique business model of Strides Arcolab. They're also estimating an EPS growth of nearly 32% coming in over FY 16 to 18 for Strides Arcolab. So a buy on Strides Arcolab with the target price of 1,500.
Okay, watch out for Strides. That's the Jeffries initiation coming in at Strides Arcolab. Poonam, thanks much for that data. But let's also tell you what's happening, or rather what's lined up from Ahmedabad today, as ET now travels all the way to the heart of Gujarat, Ahmedabad, to ring the BSE opening bell. In attendance, we're going to be chatting with Pankaj R. Patel, CMD at Zydus Cadila, who would be ringing the opening bell live from Ahmedabad today. We'll also chat with Paras Savla from Deep Industries and Rajesh Gandhi from Wadilal Industries, and we will get you managements straight from Gujarat, the epicenter of trading out there. And you can catch the coverage all throughout today only on ET Now. Okay, still in conversation with Mayuresh Joshi. And Mayuresh, What else is looking interesting in the market? Any stocks that you may have bought in the recent volatility?
So, Aisha, clearly, I think out of the large cap names, I think we still stick to our thematic theme of the large cap private banks, where we believe that the price erosion is not justified considering the kind of earnings momentum and growth that these banks can actually exhibit over their public counterparts. So banks like an Axis, ICICI is something that we continue to prefer. Within the NBFC space, LIC Housing Finance has corrected meaningfully at 2 times price to book. Looks extremely attractive. L&T, more or less a pick on the domestic recovery capex cycle theme. I think that should do exceedingly well. Decent order book. We've seen some amount of uptick in the hydrocarbon business, and though the EBIT margins in the power and heavy engineering segments are under pressure, I think the overall scheme of things in terms of how the asset sale might happen for the non-core assets, as the management has been indicating, the SOTP valuations, including its IT arm, looks extremely attractive. In the mid-cap universe, probably as I mentioned earlier, Aurobindo Pharma is something that we continue to prefer within the pharma space. Huge potential addressable size in terms of the injectable business. A&D pipelines is extremely strong, and their acquisitions actually of Actavis and Natrol will help in margin expansion. Garwari Wallropes is something that we continue to prefer within the mid-cap universe on declines. Clearly, I think fall in raw material prices of polyethylene is going to aid the company in a substantial manner. The export pickup has been quite humongous for Garwari Wallropes, and even the valuations at this point of time look extremely attractive.
Mayuresh, what is your view on IDFC? Because soon IDFC will be split into 2, holding company and the bank. Now there is enough and more excitement around the banking piece. I wonder what will happen to the stub, which is the holding piece, when the company would be demerged.
So clearly, Nikunj, I think one really needs to take a long-term perspective, and a long-term I mean at least 3 to 4 years. Now when a typical demerger like this happens, and when the entity is getting converted into a bank, and when we did a simple comparison check between how Yes Bank fared when it started off, I think it takes time for a build-up to happen, both in terms of how the deposit build-up happens, and again on the liability side, I think you have to take care of a lot of statutory obligations to be taken care of. So the SLR requirements, the CRR requirements, obviously I think if you're looking at the yields at the current juncture around 8%, which are quite low in my opinion, I think you're going to take a hit in terms of how the NIMs might actually pan out. So when you're talking about NIMs at around 3.2%, you might actually see compression happening anywhere to the tune of 60 to 70 bips, at least over the next year and a half. How the build-up happens is another aspect to be looked at. And again, I think the infrastructure lending that IDFC had, I think it was a conscious effort in terms of the management perspective to actually get it down. So I think the entire bank borrowing program, the lending program, I think that is also going to take time. So the return ratios are going to take a hit as far as the banking operations of IDFC are concerned. As for the core operations, again, I think the exposure that they probably have towards infrastructure, energy, telecom, it's going to take some time, because the asset quality probably will take some time to stabilize. And again, as I said earlier as well, they're very, very conscious in terms of lending at this point of time.
Will stay with us? 9 seconds. We'll get the first pre-open rates. Today is the last day of expiry, at least for this series. It's been a very, very choppy and unpredictable series. Up, down, we've seen all kind of emotions and all kind of moves in this series. So the September series is one series which investors will not like to, or traders will not like to forget in a lot of hurry. Having said that, well, we are working with pretty dull set of global cues. 0.5% here, 0.5% there. That's about it. No large newsmakers. The only big newsmaker, of course, is Lupin, which has considered a price hike in one of the diabetes medicine. That's about it. So markets will have to digest still a lot of global volatility. Even though the Fed event is over for the moment, the uncertainty on when Fed would move is still there. The first pre-open rates now, Lupin is at 1924, State Bank of India is 244. I want to look at Cadilla. It was a performing stock yesterday. The management would be joining us in less than 15 minutes now, live in Ahmedabad, live from Ahmedabad. Then let's look at Tata Motors and Tata Motors DVR. I also want to quickly point out some of the rate sensitives in the build-up to the credit policy. What is happening to the real estate space? Well, DLF is closed yesterday at 127. Obra Realty has managed to do well. Motherson Sumi yesterday made a comeback of about 7-8% from the day's low, and Leyland yesterday closed almost at 91.
Lupin, which has undertaken a significant price hike to the tune of about almost 200% in one of its diabetes these drugs. So watch out for what Lupin as well does in trade today. And a couple of other stocks which are going to be in news. And you've got GMR Infrastructure as well, as CARE has downgraded the road projects loans to now D. Watch out for GMR as well. And of course, Reliance Communications, considering they're now close to exiting the telecom tower business. So watch out for this one as well. But I think we can go across to Darshan and watch out for the 3 stocks to look out for in trade today. Darshan?
See, Aisha, the first one will be Lupin. A couple of news coming in. Yesterday was up in trade, technically strong. The FNOQs are strong. The rollovers are strong. They've taken a 200% hike in one of the diabetes drug called Fortamet, which is positive. Credit Suisse has upgraded the counter. So multiple triggers on Lupin. The next one is Rico India. Rico India will have their AGM today. The street is anticipating positive commentary to come in from the AGM today in terms of their future growth. They have Picasa, which is one of their key softwares that they are developing, and what is the trend forward for the software is something that the street is watching out for. And finally, 2 counters in which dealers are recommending accumulating on decline. First of all, it's Strides. Today Jefferies has initiated with the 1500 target, looking strong on the charts also, and Unichem Labs has been doing extremely well. So some of the smaller pharma companies is where there could be some kind of corporate announcement. So Unichem Labs and Strides on declines is something that dealers are recommending.
All right, Darshan, thanks a lot for that. Mayuresh, give me a non-nifty idea where you think 15 to 20% return is conceivable in the next 1 year.
So clearly, as I mentioned earlier, I think out of the mid-cap packs, Inox Wind is something that we continue to prefer. It has seen a sharp fall in terms of the price movement. But again, I think the order book is quite decent. I think that sites under acquisition are quite strong. It has done a decent capex over the past few quarters, and that capex is going to aid the company substantially going forward. Looking at the chunk of order flows that are basically flowing in, the government reforms towards renewable energy, I think that is going to be a huge impetus for Inox Wind. Our own estimates in terms of top line growth are anywhere between 48 to 49% in absolute numbers. You're looking at EBITDA margin expansion happening close to 18%, and again, valuation is looking extremely attractive at this point of time. So I think a decent order book, margin expansion happening, timely capex to cater to the increasing needs and demands of how the industry needs are going to pan out. I think that probably holds Inox Wind in good stead. So I think we are extremely bullish on the stock. Our target stands at 505 over the next 12 months.
Okay, those are some of the stocks which are going to be in focus. Mayuresh, how does one approach Tata Motors? I mean, you would have thought it definitely wins when it comes to the valuation parameter. You heard of some of the marquee names in the markets as well enter into the stock. But look at the way it's actually plunging day in and day out.
So clearly, Aisha, I think the encouraging trend for Tata Motors is probably the domestic MHCV segment. And if you look at even the JLR part, ex-China, that volumes have settled up pretty well. Now, if you look at the kind of expectations that one really has on Tata Motors in terms of new launches, yes, I think exciting launches coming through. They've got a modular strategy which is probably going to aid the company. The Chinese JV plant, again, if you talk specifically about China, yes, I think the volume slowdown has been quite significant. And do we expect the volume slowdown to continue? Probably yes, because you're not really sure on how the Chinese economic activity is going to pan out over the next 2 to 3 quarters, to say the least. However, I think the Chinese JV operations are going to aid the company significantly once you see the demand probably stabilizing and some amount of catch-up happening over the next few quarters. So I think there are more positives at this price for Tata Motors, as a lot of negatives probably have been priced into. You're going to see some amount of EBITDA compression happening because of the cut down that we've taken place, both in terms of how JLR volumes pan out, the new launches, the depreciation, marketing expenses associated with that. So clearly, I think there are ifs and buts related to Tata Motors DVR as well. But clearly, I think from a 2-year perspective, our belief is that once demand stabilizes.
Mayuresh, I'll come back to you in a second. I want to discuss India Bull Housing Finance with Ashwini Kuchral. Ashwini, 732 for India Bulls Housing. Is there money to be made in India Bulls Housing today and in rest of the month? Mayuresh, India Bulls Housing Finance, big move yesterday, closed at 732. Is there money to be made here?
So, Nikunj, the question was for me or?
No, that was for Ashwini.
That's for me.
Ashwini, India Bull Housing Finance.
Yeah, Indiabulls Housing Finance, most of these financials are doing well going into the policy. It's been a strong stock. I think we can get back towards 800 if we have favorable news coming from RBI.
What should be the broad trading idea? Remember, you told our viewers that it's time to buy stocks ahead of the Fed meeting, and that trade really has worked out well. Now, what should be the basic criteria when you're trading?
Basically, 7,500 to 8,000 has become some sort of a range. So each time we decline, you need to buy closer to this 75, 7,700 zone, and towards, possibly 8,000, 8,200, that should be your sell zone. I don't see enough institutional buying which can really, take us with force beyond the 8,200 mark. Similarly, I don't see major selling which can take us below 75, 7,700. So this will be a range-bound, choppy, narrow type of a market for the near future. And you will have, your RBI events and different events which will drive different sectors.
And as promised, let's cut across then to Ahmedabad. That's the epicenter of all action today as we get set to ring the opening bell right from there. Neeraj is right there. Neeraj, hoping for not such a choppy day today?
Yeah, hoping for not such a choppy day today. And trust me, Aisha, if people in Ahmedabad are to be believed, post-December, post-January, you can choose the timeline. The market is only going one way, and that is up. But we getting you the most promising action of the day. Remember, we've been telling viewers that after a really long time, Pankaj Patel of Kadila would be joining us to ring in the opening bell. And he's just walking into the venue as I speak. Mr. Patel, thank you so much for joining in on ET Now and on this very special BSE day out of Ahmedabad. Would this be the first time that you're doing something like this?
Yes.
Okay,
and that also in Ahmedabad.
And that also in Ahmedabad. Yes, this is the first time that I'm told that this gong that will be ringing has traveled out of Bombay Stock Exchange as well. So in a way, it's a historic moment as well.
Definitely, it's a historic moment. It's a pride moment for me, for our city, our state, and also we want to congratulate both BSE and ET Now to bring the gong to Ahmedabad.
Okay, thank you so much. Guys, it's back to you. I know the pre-open rates would just have ended, but what we'll do is I'll take Mr. Patel to the gong and we'll join you at the opening bell.
I've got a list of long questions. I'm sure your questions are ready, but I do want to understand from Mr. Patel margins, what's going to happen there in Lipanglan, the wonder drug which they've launched about a year ago. When will they monetize that? So I'm sure you will not let him go in a hurry because he's rarely seen on TV.
No, yes, he's rarely seen on TV, Nikunj, and trust me, we'll ask him all that we can, asking about the industry, about the company, but all of that after the opening bell.
Okay, Neeraj, we'll come back to you exactly at 9:14, but for the moment, let me bring our viewers up to speed with the pre-open rates. And the pre-open rates, frankly, they are not indicating or they are not suggesting anything. But there's one stock which I want to discuss with Mitesh, and that's just the technical aspect. That's Marksans Pharma. Heck of a volatile stock. Big money, a big market outperformer at least for 2015. Mark Saldana is doing all the right things. They've got all the necessary approvals in place. It's not a very cheap stock no longer, but the reason why I'm discussing Marksans Pharma is because on Wednesday, which is yesterday, Marksans Pharma appreciated by about 10%, 9.5%, and trended up on very, very smart volumes. Mitesh, is there money to be made in Marksans Pharma?
I think yes, Nikunj. Something is strongly driving this mid-cap pharma stocks. We saw strong price action in Dishman as well, and I think Markson also, as you rightly pointed out, was up 9.5%, giving a good price and volume breakout yesterday. I think the recent highs of 100, 12, 13 should be revisited. So that gives you about 12% kind of an upside. And possibly once we start breaking above this range of 113, 115, I think 130 seems to be a good logical next target. So I would be keen to accumulate this stock, keeping a stop somewhere below 92, half 92. And on any declines of 3-4 rupees would be an excellent addition to long positions.
Okay, those are some of the interesting names from the pharmaceutical universe as well. Kadila, we'll be chatting with the management. They'll be ringing the bell live from Ahmedabad, the heart of the trading fraternity in Gujarat, where the BSE gong has travelled for the first time ever. But Mayuresh, what is it that you're liking within the pharma pack? Because it seems like pharma is sort of resilience to the market volatility that one has seen off late.
Clearly, Aisha, as I mentioned earlier, I think from a bottom-up approach in terms of valuations, I think Aurobindo Pharma and Sun Pharma is something that we like. But again, I think all these stocks are very, very qualitative. So I think Cadila, Lupin, Cipla, if you have been holding on to these stocks at lower levels, you should continue holding on. For Aurobindo specifically, I think the points that we like is the kind of injectable business that Aurobindo is looking at and the acquisitions that they've made with activists in that role. That has actually propelled Aurobindo to become a $2 billion company in terms of top line. 80% of its business comes in from formulations. And again, its valuations, if I do a comparative check between its long-term averages, and again as a simple chart check between the other group companies as well, or the peer comparison, I think it looks decently poised. So I think Aurobindo is something that we probably prefer within the pharma universe along with Sun Pharma.
Right, Mayuresh, thank you for joining us, and thank you for sharing and outlining some of your top ideas. 2 minutes 44 seconds to go. And for the moment, it is evident that pre-open rates are not indicating anything. But today, it's difficult to put your finger on the market mood or the Nifty level. Why? FNO expiry, long weekend. I'm sure traders would be reluctant to really open a lot of long positions. They may want to come back on Monday because you don't want to take a risk of opening up your portfolios for next 3 days at a time when global situation is very, very fluid. Ashwani, should one not commit large amount of